talking about the basics of cryptocurrency, because even though you might want to trade them on our platform in a CFD format, first you have to understand what cryptocurrencies are and what affects their price movement and what goes into the makeup of these digital currencies. Now, I've given you a handout tonight which has all the basic backgrounds and general explanations of a cryptocurrency, and also comes down at the end to explain to you what CFD and CFDs are, and the advantages of trading cryptocurrencies in a CFD format. So you have that handout that you can download. You can see it right on your screen, and you can download that and read it at your convenience. Now, cryptocurrency is a digital currency recorded in a ledger of accounts and transactions between peers using a system of verification and encryption. Transactions are made by sharing public passwords attached to private and encrypted digital wallets. Each password relates back to a block of transactions on a digital ledger and represents a specific amount of digital coins. Well, that's a lot of words, and it doesn't explain that much. So let's try again. Cryptocurrency is essentially a digital ledger of transactions secured by cryptographic codes that act as a decentralized currency, which can be exchanged between peers by sharing public wallets to relate back to digital wallets. Okay, does that explain it all to you? Doesn't help me either. When I first heard about Bitcoin, 6 or 8 years ago, I tried to understand what these digital ledgers were and what this cryptographics were and what this encryption was, and tried to get my brain wrapped around a digital currency, because to me, currency is something I can stick in my pocket, whether it's euros or pounds, or dollars and cents, whether it's Chinese yuan, I can still get it and put it in my pocket. So after a while, I came to understand or justify things in my head. And what I finally started to look at is, even though Bitcoin and digital currency or cryptocurrency is relatively new concept, it's not so much different than concepts we had from a long time ago, and it isn't anywhere near as big. So if you start to think back to, I'm an old guy. Most of you aren't, and maybe not be able to realize what transpired so many years ago. But when I was a kid, and you wanted to give a gift to somebody, say you were going to a wedding, okay, and you didn't know what to buy, okay, or it was my 18th birthday, or I was graduating, from high school, my aunts and uncles would want to give me presents, but they wouldn't know what to get me. So they would go to a local department store, a sporting goods store, and they would buy a gift certificate. Now, they would go in that department store, hand that clerk behind the counter $50, and that clerk behind the counter would give them a certificate that said it was worth $50. Well, that's almost like digital money, except it wasn't digitalized back then. I'd have to take the certificate they gave me, and if the certificate got lost, it would vanish and be not, because it wasn't registered anywhere. I could only take it back to the store that issued it, and you'd have to spend all of that or more, because they had no way of keeping records on balances, because it was just really a piece of paper or a piece of cardboard. Okay, that's all it was. But as the world progressed and we came up to these digital gift cards and we had computers, I could go to a store and buy a gift card that was good at any one of those stores all over the world for that particular chain. And all the stuff was encoded on the back of a plastic card with that store's name on it. And I could use it anywhere. And the computer system because the gift certificate was anonymous. It didn't have who it was issued to. It was just so it was this card number. They put it in. They'd say they could see it had a $50 balance on it. Or if I had spent $10, they could see I had a $40 balance, and they'd swipe it through their machine and it would take the balance off and pay for the goods. So what am I using? A digital currency that's stored on a network, okay, that has some value. Well, as you all know today, we've moved up into the modern world where you can buy a Visa and a MasterCard gift card that's good, it's as usable as cash in any store based on the amount that it's worth. Well, that's still digital currency. Somehow, we got fiat currency, whether you're in the UK and using pounds, or you're in France using euros, or in the US using dollars, and converted it to this computerized or digital coins or digital value on this gift card. Well, in the real world, that's how it really has to happen. Okay? Because sooner or later, somebody's got to convert some currency into the digital currency. Now, I have this gift card and I want to give it to, pass it on to you, or today I can actually move some of my balance through the online network off of that card and put it onto a gift card you have. Well, what's so different about Bitcoin? Well, the difference is the value. Because we all agree it has value for some set of reasons. So now, when you go to the store and you get this digital currency or this computerized currency on this Visa card, 50 pounds was 50 pounds, and you could buy whatever you could buy at that day in that store at 50 pounds. Well, this is where cryptocurrency gets a little bit different. Because if I gave you that $50 gift card and it had a value today, which is $50, and I went in the store and I saw this winter jacket I really liked, and it was $50 or 50 pounds, I could exchange it for that gift card. But if I said, I'm going to wait till winter time because I don't need it now, and inflation hit in and the cost of that, or Donald Trump did his crazy stuff with tariffs, and I went back to buy that coat, and that coat was now $60 or 60 pounds. My gift card was still 50 pounds. Technically, I lost 10 pounds because the value of the real world goods went up and my value of the pounds didn't stay, keep in touch with it. So if you think about Bitcoin or digital currency, it goes up and down, but it moves up and down in huge, huge, huge denominations. But we also have to remember that although it's like centrally backed state issued fiat currency in many ways, there are notable differences. The main difference being it isn't backed by a central government, it isn't regulated by a central bank, and you can't use it to pay your taxes. Well, that's not much different than a Visa gift card. If you lose it, it's got no value. If somebody hacks it, it's got no value. No government is issuing it. And if, God forbid, Visa went broke and closed down, your gift card would be worth nothing. Because we see it right now with the big Toys R Us in the US going broke. Now, people who bought gift certificates for Toys R Us, the holiday season, instead of buying gifts for your grandkids, you buy them the gift cards. And they have had all these gift cards for Toys R Us that were issued by Toys R Us, not through the Visa network. They have no value now because Toys R Us closed. So today we call this stuff cryptocurrency because many aspects of the above process use encryption. And we won't get into all the details here, but generally the transaction sent out uses encryption. The transaction is recorded in a blockchain uses encryption, and the public ledger uses encryption. So if we go back to the Visa gift card, for example, what made that Visa gift card usable around the world was the Visa network. And technically, okay, although it's much different and it's a private network, it's not much different than blockchain. It moves the transactions along, makes sure everybody along the process gets paid, and keeps track of everything. but it's part of the Visa network, and it's not shared with anybody else. Your value, your charges are shared with your bank, but in Bitcoin or in cryptocurrency, the transactions through the blockchain are stored in an encrypted but public ledger. So it's available to anybody and everybody, except it doesn't have any names to you. So if imagine that the Visa network was shared with everybody and everybody could see everything, except you couldn't see your name and your personal information. You would just see this 14 or 13 digit Visa card number and all the transactions and everywhere that it would go around. Okay. It's what blockchain is, except blockchain is more advanced. Now, cryptocurrency derives its unique value from the fact that despite its lack of official backing or wide acceptance, it has generated an ecosystem in which many people are willing to trade and accept it. In fact, some perceive cryptocurrencies have more value or are more useful than other currencies in that it is a better option for certain purposes, such as seamless digital transfers and use across borders. Now, we have the basis of Bitcoin, and Bitcoin works on the blockchain network. But then we have other coins that have developed part of this blockchain but become specific uses. Okay. You have some that are smart contracts. You have some like Ripple that are designed for only bank networks and cross-border payments. Each one has a value because they have unique usage. Now, there's become a fine division, and it's really being done by the regulators lately. And there's a difference between a coin and a token. And this is where it gets a little confusing and a little muddied in the water. Tokens are usually issued through ICOs and are attached back to some business plan for a functioning business who's, instead of doing an IPO, has issued tokens. Cryptocurrency, on the other hand, is more of a tradable, not tradable, but usable currency to pay for things like Bitcoin. You can use it technically to pay for things. Okay, it's got a usable value. Okay. Now, Bitcoin tried and still tries to become a useful currency. But the fact is, none of these digital currencies or cryptocurrencies will ever make it in the real world of currency, no matter what they say, no matter what the hype is. And you have to keep this in mind, because since they're not tied back to any government or any economy, everything about their value is based on hype. Because they have no value, only what people are willing to pay for them, what the supply and demand are, because they're not tied back to the GDP or job rates. They're not tied back to government spending. They're not tied back to inflation. So one of the problems with, now, there's cryptocurrency advocates and there's cryptocurrency media, and the more they can push this stuff out to the real world, the more the value of Bitcoin or the other coins that are used as currency soar. Because as the demand increases, since they have limited supply, the value goes up. But the fact is, if you think about Bitcoin, Bitcoin went up to $8,000 today. A year ago, it was $700. A little bit over a year, 2 years ago, it was $700. Last year, it hit 20,000. Now, if you think of a currency, the thing about a currency, it's got to be stable. Because you wouldn't want your boss on the first of the month to pay you your $20,000 a month salary with one Bitcoin. And when you go shopping, or you go to buy the things and pay your bills and pay your rent, that Bitcoin's only worth $8,000, and all of a sudden your bills far exceed that Bitcoin because you were getting paid $20,000 or value of 20,000 in Bitcoin. Now Bitcoin's only worth $8,000, or it's only worth 18,000. Say it didn't fall, it's worth only 18,000. The fact is, a fiat currency is tied to a government because a government structure tries to maintain the value of that currency. And that value of the currency is tied back to the goods in the stores and what you pay for rent and what the economy is reflecting. And you don't really care if the pound tumbles and goes up and then tumbles and goes up. If you're being paid at the end of a month 10,000 pounds and your rent is 4,000 pounds, that's fine, because it doesn't really affect you. Now, when inflation hits in and all the goods and the stuff and the goods in the store are high, but remember, we talk about inflation being 2%. So if the goods in the stores rise, it's a steady increase. It's not a craziness. You know, even when we had the Brexit vote and the pound tumbled from $1.60 down to $1.30 by the end of the vote, okay, it didn't really affect what you were paying your rent, and it really didn't affect what you're paying in the grocery store. Now, sure, after a short while, it had an effect on imports because the price of imports went up because the value of but it didn't, you know, you just bought the non-imported stuff. But keeping that in mind, the value and the legitimacy, the use of these cryptocurrencies are not that important. And the storage and exchanges and wallets get all kind of complex and complicated. But the advantage to us at ETX and you who trade CFDs with ETX is they gave us new assets that have volatility and have a whole new way to look at asset values and give you a chance for new items, new assets to trade, and new opportunities to make profit. You know, understanding the euro dollar or cable or understanding the Japanese yen are quite complex, and they're involved in all these government things that are going on, central bank action, all this other stuff. Cryptocurrency is more about press, headlines, and global acceptance. So it makes it a little bit easier to understand. Now, when it comes to figuring out whether an asset's going to go up or down and how to trade it, that's a whole different story. But remember, on ETX, almost everything you trade is a CFD. The CFD stands for contract for difference. It's classed as a derivative. Basically, you never actually own the underlying asset. So on our platform, you can trade a handful of cryptocurrencies. We're going to go over and look at them in a minute. But you never actually own the Bitcoin. So you're not having to take it. You're not having to pay the transaction fees, because that's it. When you buy it through an exchange and you swap your fiat currency for it, I mean, there's huge amounts of fees involved. Okay. Now, once you own the cryptocurrency to trade them, you know, to trade Bitcoin for Ethereum and Ethereum back to Ripple and Ripple, okay, the transaction fees are nominal. But when you're having to enter them and buy them for the first time against the pound, the dollar, and use your credit card or use a bank wire, they're quite expensive. The transaction fees are very high. Now, CFDs have been around a long time and are a common investment product. And the other thing about CFDs and ETX is everything is regulated and under the eyes of the regulator. And so you know your money's safe. And the fact is, you're not having to go out and buy Bitcoin or Ripple. Okay. You're using the same account that you're using for trading, whether you're trading futures, whether you're trading oil, whether you're trading stocks. It's that same account, the same funds. So you're not having to set up separate accounts. You're not having to dish out other money, and you get to trade it with leverage. So why trade through a CFD and not just buy or sell cryptocurrency through an exchange? So that's some of the reasons we just discussed right here. But cryptocurrency CFDs allow you to trade movements in the price of cryptocurrency without owning or purchasing cryptocurrency. This is useful because you do not have to worry about security issues regarding cryptocurrency, such as encrypting your wallet, downloading a backup. You don't have to worry about the hacking. You don't have to worry about the exchanges. You don't even have to know what a wallet is. And you don't have to have a separate Bitcoin wallet, a separate Ripple wallet, because wallets sound like they're easy. It sounds like wallets in your pocket. But you have to have a wallet for each different currency. Like, it's like saying, okay, I have to have one wallet for my euros, a different wallet for my pounds, and a different wallet for my US dollar, and a different wallet for my Japanese yen. But that's what happens with cryptos. But this makes investing in cryptocurrency safer for those who are worried about security of cryptocurrency and those who do not want to set up a wallet or purchase cryptocurrency. Now, the other thing is $8,000 for the Bitcoin versus the pound, or the Bitcoin versus the dollar, or when it was at 20, that's sometimes a big cash investment if you want to buy one. Where on the platform, you can trade small little increments. The traders can speculate and make money on large price movements without needing to know how to acquire or store cryptocurrency securely. Remember, risk also magnifies though. So it's like trading any other asset. Profit, risk, profit, risk, profit, reward, risk, or loss. Okay, they are matched. They reflect the mirrors of each other. So for as much money as you can make is as much money as you can lose. But one of the biggest benefits of trading CFDs as opposed to exchange is you can sell or short a cryptocurrency. That means you can sell it at a higher price to buy back later at a lower price. You can't do that if you're actually owning the cryptocurrency. All you can do is buy it to sell at a higher price. So if Bitcoin soars all the way up to $20,000 again, okay, unless you're trading on a CFD platform, you can't sell it because like you say, oh, that's a very high price. We know it's going to fall again. Can't sell it. So trading CFDs means you can buy or sell at the market price and gain more from large swings in either direction. So if you believe the price of cryptocurrency will drop, you're able to short the currency by opening a sell or short trade. This is something you can't do when you actually own the cryptocurrency. As a trader, this gives you much more flexibility when it comes to a trading strategy. Now, generally, execution speed is extremely fast with CFDs. Exchanges, though, rely on volume. So if there aren't many people trading, your order won't get filled. And finding the exchange you want to trade on and understanding how that exchange works, and there's many different types of exchanges, can be quite cumbersome. Sometimes it can take 1 or 2 days to finalize a transaction. Brokers, on the other hand, are plugged into liquidity providers, which offer guaranteed and often instant execution. As a trader, this means you can quickly react to market movements. Also, and if you've been watching the news or you attended our class last week on the new FCA ESMA regulations, you know that the European super regulator has reduced leverage all across the board, not just on cryptocurrency, but on all trading, and cryptocurrency is now offered 5-to-1 leverage. That means for every $1,000, you can tie up $5,000 of Bitcoin. So leverage allows you to control a larger position with a small amount of capital. Skilled traders will be able to use this to their advantage. Of course, leverage does increase risk, and this is definitely something to watch out for. The markets aren't moving much, but you can still make beneficial trades by using leverage. Cryptocurrency exchanges all suffer from an issue of trust. Exchanges have closed down out of the blue. Money has been stolen, attacked by hackers. One advantage of brokers is that many are fully regulated like us, and your funds are kept segregated and often insured like us. Brokers have to comply with regulation where cryptocurrencies aren't currently regulated. Okay. Also, when trading with us on a CFD format, you have a very low spread. the difference between the sell and the buy price. In general, it's much cheaper to trade through a CFD broker. I mean, I've seen cryptocurrency exchanges when you're, again, exchanging fiat currency, which is pounds, euros, and dollars, to buy the Bitcoin, charging up to a 10% credit card transaction fee, and then a 0.5% fee. And they get very, very high. Okay. ETX, whatever money's in your account, whatever deposit you want to make, you wire and there's no fees, and you trade by the spread, the buy and the sell price. So let's give you an example. Say, for example, you anticipated cryptocurrencies would fall in value. And when I use the word cryptocurrency, it's a general one, but we're talking about the majors. Okay. Today, there are over 1,000 different coins and tokens out there. Yes. When you just think a couple of years ago, it was only Bitcoin. But there's only a handful, just a very small handful, that have the volume and liquidity to provide trading. Even most platforms only offer exchange platform. If you want to go buy some of these new tokens, it's very complex, and you end up having to buy Ethereum and then use that to buy that other one through a private exchange. It's not an easy process. And most of the cryptocurrencies have no trading value. They have a value attachment, but there's no liquidity. There's no exchanges for them. There's no miners for them. So even though you have it, you can't get rid of it. So let's assume, for an example, that ETX is quoting spot currency exchange for the Bitcoin US dollar at a selling price of 36.07. Now, we could jump it up to 76.07, but when I wrote this class a while back, it was at 36.07. And the buying price was 36.09. So you have a sell price and a buy, which is your spread. In other words, a Bitcoin is worth a little bit more than $3,600. You could open a short position selling 10 CFDs at $3,607. What's the value? 10 CFDs would be $36,000 worth of Bitcoin. Okay. So today, with 5-to-1 leverage, what would that cost you? It would cost you about $7,000. And the price falls once the quoted buying price has dropped from 36.09 to 36.07. You have covered the spread and you start making profits. Now, many people who are interested in trading cryptocurrencies find CFDs are much easier than dealing directly with that currency. If you want to buy cryptocurrencies directly, you have to be concerned with security issues such as encrypting your wallet, keeping a backup, and still you wouldn't be able to make money directly on the fall in value. Now, as always, CFDs provide a tax-efficient way of profiting from the change in the value of a financial instrument without ever having to buy anything. So at ETX, we only offer the largest coins and the ones that have liquidity and volume. So we start out with Bitcoin, of course. And Bitcoin is the original cryptocurrency. We have Bitcoin Cash, which is a fork of Bitcoin. Bitcoin Cash is a peer-to-peer electronic cash for the internet. It is fully decentralized with no central bank. So Bitcoin Cash is a continuation of Bitcoin project as a peer-to-peer digital currency. We have Ethereum. And Ethereum is an open software platform based on blockchain technology that enables developers to build and deploy centralized applications. And this is where we come up with smart contracts. So Ethereum serves a different purpose than other cryptocurrencies, but it has quickly grown to displace all but Bitcoin in value. Then we have Litecoin and Ripple. Now, Ripple is quite unique. Ripple is considerably different from Bitcoin. That's because Ripple is essentially a global settlement network for other currencies such as the US dollar, Bitcoin, euro, and the pound, or for any other units of value. To make such a settlement, however, a tiny fee must be paid to Ripple's native tokens, and these are what trade on cryptocurrency markets. And it's Ripple starts being employed and their technology by more and more banking institutions all over the world, their value of Ripple is steadily increasing. So unlike other cryptocurrencies, Ripple is not about speculation, but strongly focuses on transaction utility. Dozens of banks around the world are looking at Ripple to improve their transactions. So let's go over to the ETX Trader Flow platform and take a look at Bitcoin. So let me pop up the platform here for you on the screen. Oh, give me a sec. Okay, as soon as it pops up, there we go. Come on. Give me 1 second to get it up to date here. Okay, so if we go to our Bitcoin, if we just look at, if we go onto the platform and we locate under market search, cryptocurrencies, we can click on the cryptocurrencies and we'll see all the cryptocurrencies available on the ETX platform. So you can see we have Bitcoin dollar, Bitcoin pound, Bitcoin against the euro. We have Ethereum against US dollar, Bitcoin Cash US dollar, Litecoin US dollar, and Ripple US dollar. These are the cryptocurrencies you can trade on our platform. Now you can just find them under the cryptocurrency, or you can do like I do. I put up my own watch list and pick the ones that I watch regularly. Or for class, okay, so we have the three major cryptocurrency, Bitcoin in the three major fiat currencies. And you can just see them very easily, and the charts are on the right. Okay. Now, for those of you who don't know how to actually implement a trade or use our platform, it's not so complicated. Find the asset you want to trade, click on the buy or the seller, the bid and the ask price, or click on open a ticket. Once you click on the line, it's going to open a ticket for you to trade. And now I'm going to pop up a video for you to watch how to actually implement a trade on the platform. All right, ladies and gentlemen, I hope that gave you some general idea of how to use the ETX Pro platform to generate sales. So on your screen, you can see I've got the alert set up, opened up for the Bitcoin, and we can decide what trigger level we want and what price we want and just click it out there. We can actually even type in a message like, hey, Barry, go buy now, or get ready to buy, or get ready to say. You type in whatever message you want and then create your alert and it'll be sent to you. Okay. Now, I generally much prefer not just having alerts, I like to have different orders set up. Now we have a whole class of order entries, but like my preference is I always trade with order entry. I don't use a trade, and I'll set up the price in which I'm willing to enter an order. And the nice thing about Bitcoin is I'll always use good to cancel orders. Okay, the reason being is, say Bitcoin soared to $8,000 today. Okay. But we know Bitcoin was at $20,000, almost $20,000 a year ago. I'll say, I think anytime Bitcoin hits 19,000 or 18,000 or 6, it's worth selling. So I could set up an order that I can leave open, to, good to the end of the year, that just tells the system anytime Bitcoin hits $17,847, sell, a big sell, 1/10, 100th, whatever I set up for. I can set up my stop loss, my take profit point, set up everything. I just leave it on the system. Because the craziness with Bitcoin and some of the cryptocurrencies is they soar one day 500% and topple the next day 200%. Well, if I can take care of Bitcoin topples down to $7,000, I'm going to buy it. So I'll set the system. As long as you have enough funds in your account to cover the margin, the system will generate the trade for you. And using a GTD or a good to cancel order, okay, just click on the bottom here and then set the date you want it to stay open till and set everything else. And you can set up your stop, your limit, the price, everything you need to do in order. So I'll have my alert so I'm aware that Bitcoin's rallying, but I'll have my order all set up so if I'm in a meeting and I don't have to go panic when it gets there, or I'm out to dinner, or I'm out to lunch. So you have lots of ways that you can do this using special order entry types. And we have a whole class on understanding order entries because it's very, very valuable to you. But Bitcoin, Litecoin, Bitcoin Cash, Ripple are no different than trading any of the other assets. It's just calculating and deciding where to enter and exit those assets. Okay. And that is a little bit complex because these assets are so new that nobody knows exactly what they're going to do. We can look at historical levels for Bitcoin, but what do we have? Not much. Okay. So watching the news and the headlines, because if you understand the Bitcoin community and the media and its effect on the price on all of these coins, you'll understand because they're easier, less complex than understanding out what a central bank is trying to do. So on that note, I'll say goodnight to everybody. Please read the handout I gave you, and that should help you along, giving you some general information. And if you want, set up another demo account with ETX. You can set up another demo account, whether you're trading live or not, and trade a couple digital currencies to see how you like them. Build your own strategy, your own technique. Trade them in using using a demo account until you're sure that you got it down pat. Thank you very much. Have a good night now, and thank you for supporting ETX. Good night now.